Welcome to Belva Capital's Market Update November. As you can see, we're approaching Christmas time. This is always the time for an outlook for 2023. But before we go to the outlook, we'd like to look back into November. What happened? Again, a very rough month with a lot of volatility. In the first week of November, around the 3rd, we saw a low, especially on the US equity markets, where inflation expectations and interest rate rising expectations hit their highs. And since then, as we could see an ease by the Fed and Mr. Powell, we could see an equity rally, especially on the more conservative stocks. Once again, as we mentioned already last month, lagging this month were again the large tech companies due to weaker outlook and reduced estimates on their earnings. And the question is, do they recover in the next couple of weeks or month, or do they still lagging against the rather conservative indices? So the equity rally, especially in the US market, was offset by a very weak US dollar. Who expected that? Since October, the US dollar lost already 10% against the euro, and this made European investors with US stocks almost stand with zero performance net. After the worst year in bonds for the last 30 years, with on average 15% of depreciation in value, bond markets now seem to be very attractive compared to the past years. Why is that? Because we've seen a depreciation of the oil price since the peak in June. In June, we had Brent around $115 per barrel and now down at 85 levels, which is already below the levels at the beginning of the Ukrainian crisis in February. This will keep the inflation at lower levels for the future and might attract bond investors into the bond market, which could stabilize the portfolio with a very unclear outlook about earning estimates in the next year. So for 2023, we see bonds as very attractive, and we would allocate that on a high quality level. On top of that, stay invested with also quality on the equity side. Don't be too nervous and stay tuned. We wish you a Merry Christmas, and we hope to see you back in January 2023.